Hi guys, welcome back to my channel. In today's video, I'm going to go through a specific trading strategy called the gap and wick fill. So I know I've discussed gap fills and wick fills in some of my videos, but I'd really like to go into depth with these just because I have been taking them quite frequently recently, especially with SPX. So I just want to show you guys how I analyze the gaps, analyze the wicks, and then the potential trading strategies you can implement within that gap or wick fill. So sometimes the gap is on the daily time frame and you could take a swing on it 1 minute, 5 minute, 15 minute. It really just depends what time frame you find the gap or wick on and what trading strategy to implement based off of that. Usually gaps and wicks occur after hours or in the pre-market. Most of the time the stock has news, so there usually is a catalyst behind it that causes the stock to either gap up or down or wick up or down. Most of the time it is earnings news, so you will see stocks gap up or down around their earnings or when they report earnings. For SPX specifically, it depends on market sentiment in the morning. So if futures is up, SPX will gap up. If futures is down, SPX will gap down. And depending on how market sentiment is that day or investor sentiment is that day, the stock can either fill the gap back down or fill it back up depending on which way it gapped or it wicked. And I'll go through specific examples, and today's actually a really good day because I took a gap fill play on SPX, so I'll go through that with you guys, and then I'll show you some daily gap fills that you could potentially take. I know there's a couple stocks that have some decent gaps to fill or wicks to fill once it gets to that point. That being said, as always, don't forget to like and subscribe. Comment down below if you have any questions or concerns, and let's just go ahead and get started. So like I said, usually when you see a gap, it occurs after hours on the pre-market, and it's usually due to an underlying factor. For the most part, it's news, some type of big catalyst. This could be earnings, this could be product releases, this could be a bunch of different things that could potentially move the stock and influence the company. So what you'll see is that the stock either gaps up after hours during the pre-market or gaps down. It then will tend to fill the gap up or down, or it could potentially be a gap and go, which I'll show you guys an example of that as well. For a wick fill, what you'll see sometimes, especially on some of the indexes like SPY and QQQ, you will see a wick where the market will wick up or down. What this usually signifies, and again, the wicks can happen on any time frames. Sometimes you'll see if there's news during market hours, a stock could potentially wick or the indexes could wick depending on overall market news. It really just depends. Sometimes it's market makers just manipulating the market. But again, for the most part, you'll see wicks also occur in the after hours and in the pre-market trading, and they will look something like this. If you do see a big wick during market hours, like I said, sometimes it's news, sometimes it's just market makers. If you see a wick something like this, it could just signify that there are sellers present, pushing the stock back down, not allowing it to break a specific level. That being said, I'm going to show you some examples of gaps that have occurred and filled, and then some gaps that could potentially fill in the coming months or years depending on where the gap is. So first and foremost, I'm going to go show you guys SPX. So I did actually trade this gap today, and I do trade SPX's gaps for the most part almost every day. And the reason I like to trade SPX gaps is because they are the highest probability setups you could potentially take depending on the overall market sentiment. It's really easy to read, really easy strategy to grasp, and this is why I like this and recently have been trading SPX so much is because of these gap fills. They're very, very easy to catch in my opinion. For example, if there's economic news or global news or any type of news that could affect the market, economic data, the market, depending on where futures opens, either red or green, and how much they make a move after hours in the pre-market, SPX tends to gap up or down as well. So if futures is green after hours in the pre-market, SPX will gap up. If futures is red, SPX tends to gap down. What you will usually see is one of two things. One, for example, this gap here is you could potentially see SPX fill the gap down. Okay, so this gap looks like, if we zoom in here, starts at around 46.02. Okay, that is the post gap level. The pre-gap level is where the stock was prior to its gap, which is 45. It looks like 45.75. Okay, is where I would put this because that is a psych level. Okay, I would actually put this level at 4,600, so I wouldn't enter this until it broke 4,600 because that is a psych level and it could potentially bounce there. Now, this is your pre-gap level, this is your post-gap level, your level of where the stock gaps up to. What it could potentially do is break 4,600. Once it breaks 4,600, that is your entry point for puts. If a stock gaps up, what it tends to do is fill the gap back down. If it gaps down, it tends to fill the gap back up. So that is one of the things that can happen. And you can see here the SPX did fill the gap slightly. So this would be a nice little scalp here. Break of 4,600 to your next level of support, which looks like right here was 4,590, which SPX does move in 10.5 to 10 point increments. So that would be a level of support. One thing that I do want to mention is a stock doesn't necessarily have to fill the gap all the way through. Depending on what time frame the gap is on, depending on overall market sentiment, the stock could fill the gap halfway, it could fill the gap all the way through. It really just depends on overall market sentiment and if the market has direction. You can see here the SPX did fill probably like halfway down. It didn't fill the rest of the gap all the way down. Now, what can happen here is it'll bounce back, come back down, finish filling the gap, or it'll just bounce and then fill the gap on another day, which is what SPX did today. If we look at today's, you can see here. So because SPX filled from 4,600 down to 4,590, now the gap level that you look for entry is 4,590. It's already filled the gap from 4,600 to 4,590. So the next day, you can see here, this is today's price action, you would enter at the break of 4,590 down to 4,575 or whatever other levels you have on SPX. I had 4,585 and 4,580 as levels, and then in conjunction with whatever ES Futures is doing as well. So I'm going to show you guys the gap play I took on SPX today. So remember what I said, it filled from 4,600 all the way down to 4,590 already. Now what you're looking for is the rest of the gap to fill. So the gap actually now starts today on 45.90 down to the rest of the gap, which is 45.75. Along the way, whatever levels, this stock's not charted because I want to show you just a pure price action. Along the way, whatever significant levels of support or resistance that you have, the stock could still potentially bounce there in conjunction with whatever ES Futures is doing in just specific to SPX. So SPX could bounce anywhere that ES Futures has potential levels of support and resistance. ES Futures did have a strong level of support at 45.80. So we can see here, this is the 315 candle here that I entered for SPX puts here. And then, so this is what ES is doing, making a nice move down to 45.75. Because that was the break that I was looking for, was 45.90 down to 45.75. So this is your 317 candle. This is the candle that I entered SPX puts on. You can see here this 317 candle held below the 45.90 level, and it made a nice move down all the way to 45.80, which was my next level, my next significant level of support before it finished filling the gap to 45.75. In my opinion, 45.80 is pretty close to 45.75. 5 more points. After this, I'm not looking really for that gap to fill because it filled most of it. A 5-point gap would probably be a very quick 1 to 2 minute scalp for a stock like SPX because it moves in 10-point increments. Entered at 317 here. I exited most of my position at 325. So I exited most of my position on this candle here. I'm sorry, this candle here, once it touched 45.81, made a low. And then I exited the rest of my position, it looks like at 326 right here. So I caught, like I said, most of this gap play was a very, very clean gap play. So this is how you would catch a gap. That is one example of how you can scalp a gap play. Now, another thing that I want to show you guys is the stock could also do something like this. Okay, so you can see here on SPX, it gapped up. Okay, so remember, if a stock gaps up, it tends to fill the gap back down. Like I said, one of two things can happen. It can fill the gap back down, or it could be a gap and go. Okay, so what happens is the stock gaps and it continues on its way up and it has a strong uptrend after that gap. On the opposite hand, it could gap down and continue that downtrend after that gap, because it has a strong downtrend, has the catalyst behind it, and the sentiment stays in that same direction, or vice versa. So there's two things that can happen. It can fill the gap, or it could be a gap and go play. Both of them are great trading strategies to implement depending on what market sentiment is showing you. Okay guys, so now I want to show you guys another gap that happened. So here is Facebook on the 1-year daily time frame. Facebook reported earnings, or they reported, I'm pretty sure it was earnings, yes. So Facebook reported earnings here. This is when they report earnings, this little ticker symbol here down here. It signifies that the stock reported earnings. You can see that they gapped down after earnings. I don't remember exactly what their report was, but investor sentiment was low on Facebook and they ended up gapping down. This is a huge daily gap. Now, depending on the stock and how far the gap fill is, the stock could potentially fill the gap in 1 day. It could fill the gap in 2 days. It could fill the gap in 1 month, 2 months, a year. It just depends on the overall price action of the stock. This specific gap is around 40 points. So it's gapped from 250 to around 290. Facebook doesn't move in 40-point increments on a day-to-day basis. If it was a stock like Tesla, or if it was Amazon, they tend to move in bigger increments. So a 40-point move in 1 day is not that significant for those stocks. But a 40-point move in 1 day on Facebook is not very likely to happen unless there's significant catalyst behind it. So a gap like this on Facebook, okay, I would look for a swing. So if Facebook breaks on the daily time frame and holds 250 on the daily time frame, Facebook would be a nice 4, 5, 6 month swing to 290. I'm sorry, did I say 450? I meant 250. 250 to 290, because Facebook tends to move in like 7-point increments, 5-point increments on a day-to-day basis. I would probably give myself about 5 months on this specific play, even 6 months, just depending on how much time you want to buy for yourself. The more time that you buy, the better, because depending on market sentiment, when you're swing trading, you are at risk to adverse events. So anything could really happen. So you really want to pay attention to that and always buy yourself time. So I'd buy a long-term position here on Facebook, 5 to 6, even 7 months out, once it breaks and holds 250 for a potential gap fill all the way to 290. Okay, so this is a gap that I am watching on Facebook for a potential swing play. Make sure to watch that to see how it moves, and I think this will be a nice little gap to play once the market starts to pick up. A lot of stocks are getting close to their all-time highs already, so this I see this potentially filling over the next several months, depending on how the economy is. All right, guys, the next thing that I want to show you guys is a wick fill. So I usually tend to see wicks on the indices, QQQ and SPX. And the good thing about this is, for example, if you see a wick fill on, I'm sorry, not SPX, SPY. If you see a wick fill on SPY and QQQ, it could potentially signify market direction. So if you do see an upside wick on Tesla, for example, this upside wick here, I'm sorry, I keep saying Tesla, this upside wick here on SPX, wicks you trade the same way that you would trade a gap. If the index starts to break out of the wick, pre-wick level, it tends to fill the wick all the way through, and vice versa. Obviously, overall market sentiment needs to be there as well. Today, SPY's overall market sentiment wasn't bullish, so SPY wasn't able to fill the wick all the way through. However, it can potentially signify overall market direction. So if you see here on QQQ, this was yesterday, QQQ had a wick down. Okay, so the wick started around 367.50. It did end up filling half the wick down before it ended up bouncing. So again, you still want to pay attention to your support and resistance levels. So from 367.50 to 366, every 50-point level on QQQ and SPX or SPY tends to be a level of support or resistance. Filled all the way down to 366. The end of the wick was around 365. So it filled most of the wick down prior to bouncing. So pay attention to that as well, because these wicks on QQQ and SPY can determine overall market sentiment. So what can happen is, for example, if you're watching a stock and it's approaching a level of support, but you see that QQQ has a wick that starts at 367.50, what can happen is that QQQ could potentially bounce at 367.50, taking the market with it, and vice versa on SPY as well. If it does break 367.50, that gives you another reason, another probability or high probability chance for your stock to potentially make the move down, because QQQ also has a wick to fill down. Overall market sentiment can continue down as well. Okay, so this is how you use the wicks on the indices to be able to, I'm sorry, on the ETFs. I keep saying indices, it's ETFs. How you use them on the ETFs to be able to determine overall market sentiment and be able to determine entry and exit points and potential bounce zones for the stock that you're watching. So make sure that you're watching the wick fills on your ETFs, SPY and QQQ, because it will determine overall market sentiment if it has an upside wick or if it has a downside wick. And usually, for the most part, you will see a lot of wicks on SPY and QQQ. For a stock, if a stock wicks, again, you can find the wick on any time frame. You can find it on the 1 minute, you can find it on the 5, 10, 15. Okay, this is a perfect example of Tesla here. The wick starts, I would use the pre-market low, okay? So even though this candle wick started at 11.10, I'm going to use the pre-market low because that's the most significant level of support. 11.05, or even probably, yeah, 11.05 is going to be your entry. Stock breaks 11.05, fills the wick all the way down. It wasn't until it fills the wick all the way down where it ends up bouncing before it continues its downtrend. Okay, this is a really good example of a wick fill right here. And sometimes the wick fills that are in pre-market tend to fill very quickly at open, so they're a little bit harder to catch. However, there's always wick fills on the higher time frames as well. So for example, if you look at this wick on Tesla at 965, whoops. So it starts at 965, okay? And I'm going to change this so you guys can see it a little bit better. Okay, so look at how it fills the wick in 1 day, okay? So this is the wick is from 965 to 987. If we zoom here, 965 to 987 in 4 hours. So this is a 4-hour candle. In that day, it filled the wick all the way up. So you really want to pay attention to your wick fills, your gaps, because they, throughout the day or throughout the month, depending on the stock that you're trading, it can really help you find high probability setups. This is a high probability trading strategy. Both of these, the gap and the wick fill, depending on the time frame that you find it, will determine the trading strategy that you implement, whether you're scalping it, day trading it, or swinging it. Usually you're day trading or swinging on higher time frames, and then on, if you see a wick in the pre-market or after hours, or a gap in the pre-market or after hours, you're usually scalping it. So just pay attention to those. All right, guys, so that's it for today's video. Thank you so much for watching. If you have any questions, comments, or concerns, any video suggestions, please comment down below. All of my social media is linked down below if you want to connect with me. I usually respond on Instagram a lot quicker than YouTube, so definitely go ahead and reach out to me if you have any questions or concerns about trading or anything trading related. And that being said, I will see you guys in the next video. Bye.